what is your biggest takeaway of Trump's first State of the Union? His 80-minute speech.
Well, I think it was surprisingly good. Presidential, I guess, is the word I'm looking for. It was a culmination of what we saw at Davos, where he really walked out of that, and everyone said, you know what, this was a really presidential speech. So people were concerned about what to expect, especially coming off a 300-point move in the Dow. People were concerned that he might be a little bit testy or edgy or nervous about the prospects of what the market was going to do. So they were concerned about what he was going to come up with. And I think he checked all the boxes in this, the market's responding accordingly. You shouldn't expect a 500-point move after that. It was very low on definitive terms about the infrastructure, most importantly, but I think overall it was pretty good.
Yeah, he touched the very wide ranges, as you mentioned, and also, for example, the infrastructure spending and the infrastructure improvement is badly needed in this country, and one of the main topic everyone's talking about. So what can we expect, and when will we see some real actions from?
Well, I think the Northeast in particular has a lot of infrastructure needs, and they're not small. I mean, they range from water supply to bridges to roads to commutation. So these are big ticket items. So the government's not going to be expected to pick up all of it, and I think he was pretty clear about that. He was looking for state help, he was looking for county help, and more importantly, he was looking for private sector help. So that's going to be a lot to put together as a one package. But I think what we've got to start with is, what does the federal government have in mind? What do they expect to put forward? This is especially coming off some tax cuts where there's going to be $1.5 trillion less coming into the coffers. So it's an interesting thing, and there's going to be a lot of work, but this is going to be something that's negotiated, and it's something that could be highlighted why the market kind of keeps getting a boost as we go down, at least for the next few months. Yeah, I don't know if we'll see anything as far as infrastructure definitively this year. It's going to take a while. I mean, this isn't something you put on, you just say, we're going to spend more on infrastructure. Where are you going to get the money? Who's going to appropriate it? Who's going to take the cuts? We already know that Congress fights about every last dollar. So it'll be curious to see on where they come up with this money.
Better idea, like to invest some infrastructure.
I mean, infrastructure is definitely, they're definitely going to benefit from it in the long term, but we've seen moves up already on the anticipation of infrastructure spending. So don't get too ahead of yourself saying, you know what, companies like a Caterpillar are going to see this huge move up, or some of the other stocks that have moved accordingly. It'll be a slower process because it's going to have more definitive terms that are going to be played out a lot longer.
Also, Mr. Trump is very proud of the stock market, the performance, and he was saying that it's making one record after another. So from your point of view, what is driving the markets?
Well, you should be kind of proud of what the market's doing. The market's performed exceedingly well since he's taken office, but a lot of it has to do with corporations. Earnings have been fantastic for the fourth quarter. I think top and bottom line have exceeded 80%. It's normally historically a 60 to 61%. So that's impressive stuff. Is some of it tax reform? Absolutely. Is some of it less regulation? Absolutely. But I think some of it is corporations now are lean and mean, and they're able to focus on their business, and they are doing quality things with the money that they're earning. And I think that's important to note. So he should take some of the credit, definitely, but a lot of it has to do with the corporations themselves.
And also for the Federal Reserve part, do you think that the Fed tend to more hawkish after the Janet Yellen's finished meeting?
I mean, the potential is there to be more hawkish. I think after this meeting today, we're talking about one rate hike in March. The Fed anticipates 3.
The market already priced in that.
I think it's already priced in this next one. It won't be today, obviously, because there's no way you, as a Janet Yellen leaving, increases rates. So I think you want to leave the slate pretty clean for Powell. So that's important. But a lot of it's going to be dependent on the data and inflation. They cannot get a handle on it. So maybe a new Fed coming in maybe changes some of the metrics and they can get a handle on it. But there's a lot to look at as far as some of the moves that we've seen in the dollar, some of the moves we've seen in interest rates, some of the moves we've seen in the 10-year yield. So it's not just going to be more hawkish as a whole. It's going to be what are commodities doing? What are corporations doing? Start to see, growth in this country come down a little bit. If we start to see unemployment tick back up, those would all be certainly headlines. The question is, what happens if the market falters here? How much is the Fed going to look at the markets? They said that they will not look at the stock market in particular to make their decisions. But if the market falters here, that was part of the reasons for having these rate increases to give them a little bit of backstop if the economy falters, if the market falters. So, there are concerns of a market correction if the 10-year ticks above 3. And right now, we're certainly headed that way.
My personal WeChat account is now available to all of you. Please follow me and let's chat.